Hello class, this is Brian from financialtrainingschool.com and welcome to GT403, making money versus being profitable. Most people think being profitable and making money mean the same thing, but these terms are often used by different people at different stages of trading. Considering you ventured this far into my GT series, I assume that by now you're emotionless towards the value of money. If you aren't, then you haven't been trading long enough yet, but for anyone who's been in the game for a long time, you'll know that money comes and goes. By the way, this doesn't just apply to trading, it applies to businesses and life in general as well. So here's a quote from the movie Margin Call. "It's just money, it's made up. Pieces of paper with pictures on it so we don't have to kill each other just to get something to eat." So there's some food for thought. This lesson is similar to GT401, trading accuracy versus profits, in that I'm trying to help you transition out of a newbie mindset into the mindset of a veteran trader. To this day, the question that keeps popping up from people is whether or not it's possible to make money trading. Although this question is answered in length on my FAQ page, I've decided to make this lesson to explain a different aspect of this question. So the underlying moral of this lesson is for a newbie audience, but it's placed in the GT400 series because this lesson has to do with mindset transitions, which is higher level stuff. So to start off the lesson, here's a point of reference. In the world of stocks, most people are investors. In case you weren't aware, most investors have large sums of money, or they simply don't have time to trade, so they usually just park their money somewhere, hoping it grows over time. Since their positions are held for a long period of time, they often compare their portfolio growth to other financial instruments. The simplest example is a savings account, which usually yields less than 1% per year. The next point of reference are bonds, which range between 1 to 2% a year. After that, you have stock indices like the NASDAQ, S&P 500, the Dow Jones Industrial Average, which can be up to 40% per year. So basically, here's the mindset of an investor. They don't want to lose money, and they want their portfolio to grow more than other financial instruments. The result is they want comparable profits. More profits is nice, but not necessary. So that was the mindset of an investor. Now, as a trader, what's your goal? Most new traders want to double or triple their account in a short time, but this doesn't happen in reality. But let's pretend for a minute that it does. What do you do afterwards? Ideally, you'd like to repeat, but what if you can't? Luck is when you're only able to do something once, while skill is when you're able to repeat a task over and over again. I'm not here to burst your bubble, but I hope you realize by now that it's not easy to double or triple up. Having success early is good for your ego, but will hinder your growth in the long run, especially when you fail to repeat your initial success. Early success leads to unrealistic expectations down the road because you haven't experienced a loss yet. It's better to lose in the beginning when your losses are small than to lose later on when the losses are bigger due to having profited first. So on the topic of unrealistic expectations, you always hear about someone turning a small amount of money into a large sum of money. As human beings, we all want to copy that person, but not all of us will succeed. I'm sure you've all heard the phrase survival of the fittest. Those who can adapt survive, those who can't perish. In finance, the odds are against you. 99% of traders lose or wipe out before they can get the chance to improve. The primary reason why most people give up is due to unrealistic expectations. Just because you heard someone else do it doesn't mean it'll be easy or even possible for you. The sooner you realize this, the better, because you'll adapt by changing your expectations to something more realistic. Only then will you be able to move on. Otherwise, you're welcome to continue struggling to reach an unrealistic goal if you want to stay at the bottom. It's hard to make this adaptation, but it's necessary if you want to become a successful trader. Most people who get into trading are either in it to make lots of money fast or want to replace their day job. Only a small subset of people start trading with the intention of making it their career. Being motivated is nice, but make sure you're trading for the right reasons. Intrinsic motivation far outweighs extrinsic motivation. If you're just in it for a quick buck, you won't last very long. Here's another quote from the movie Wall Street 2. "It's not about the money, it's about the game between people." I've already established that making money fast is an unrealistic expectation. But what about replacing your day job? As long as you've adapted your expectations to give yourself time to develop as a trader, then replacing your day job is a realistic expectation. But if you're hoping to start trading and immediately start making the equivalent or higher salary than your day job, then that's an unrealistic expectation. The term making money is usually attached to some unrealistic goal, while being profitable has a much simpler definition, considering it's a business term, while making money is from everyday life. Profit is the money a business makes after taking into account expenses. So the formula goes like this: profit equals revenue minus expenses. In trading, All profit means is your ending balance is higher than your starting balance. However, if you continue to trade, then your ending balance never stops changing. However, if you had decided to stop trading when you reached X dollars and that amount was higher than what you originally put in, then you would be a profitable trader because you walked away with profits. However, as I'm sure most of you would agree, why would you want to stop making money? So in reality, the ending balance doesn't stop until you quit trading. Thus, it's no longer just being profitable in the short run, but also staying profitable in the long run. The only way to stay profitable in the long run is to follow all of your trading rules, control your emotions, and set realistic goals. So here's a numerical example to put things into perspective. Assume you have $1,000 to invest. You could buy a bond and make 2% in a year, which amounts to $20. Alternatively, you can start trading with a goal to make more than $20. This is a very realistic goal and easily obtainable, but most of you will strive for more, which is fine as long as you're able to walk away with at least $1,020 at the end of the year. Otherwise, you would have been better off just buying a bond instead of wasting your time trading. So here's the take-home message. New traders want to make money, but having this mentality can cause them to lose money as well. This is why the majority of traders lose. If you're lucky, you may break even, but in order to become profitable, you have to have the proper mindset, the right vision, and the skills to execute. Your job as a trader is to consistently profit, not just to make money once. Anyone can make money in the short term, but it's what you keep at the end that counts. Aim to have a profitable year or trading career, and you'll be well on your way to grow your portfolio. With that said, I'll leave you with one last quote from the children's story of The Tortoise and the Hare: "Slow and steady wins the race." So that's it for this lesson. Hope you guys enjoyed it, and I'll see you guys next time.